we're live now.
I think we are becoming live.
Are we?
You're just looking a bit worried. Oh yeah, I think we are. Yes, we are live. Hi everyone.
Hello.
It's Sarah Asquith-Vallance, and today I have my husband Andrew, and we are talking about personal finances in times of uncertainty, which is obviously where we are all finding ourselves now. So I'm going to just wait a minute or so to see who is going to be hopping on live. If you have any questions during the conversation, I may or may not be able to see them, but I'll check on my phone in case they come up there. But we are, if you can see us, if you can hear us, that would be great. If you can let us know if you are on live. And we are... if you can give us some hearts as well, that would be great. Give us a bit of love and we can spread this message even further. I've been doing posts all week. You're sitting there nice and quietly. I've been doing posts all week, and really because, as you probably know, I am a business coach for female entrepreneurs. Yeah, this is a big time of uncertainty for us all. So I am so pleased to have Andrew on hand. He's one of the top guys who to ask questions about this situation at the moment. So I will give you a little introduction, and I don't want his head to get too big. But okay, so this is the bit of blurb really I can tell you about Andrew. So he's a financial and pension specialist. He's been working in the financial industry for over 20 years. He has a degree. Hi there, everybody. People are joining. He has a degree in economics from the University of Durham, and from then he went on to work in corporate finance in London. He's worked at Chase Manhattan, JP Morgan, and PwC. He has also been the director of a pensions provider and has worked as an IFA. So he has a really good background.
And I'm so proud that my own wife had to write all of that down to make sure she could introduce her own husband. I'm deeply honoured. Thank you.
So welcome. So
sarcastic.
And I also want to also let you know, he's Andrew, I would say his zone of genius really is that he is very good at understanding the complicated stuff that the general public may not be aware of or can really get to grips with. And he's really good at understanding that and delivering it in a really clear and concise way. So much so, he's actually even been on the BBC News, News at One.
Which was much less terrifying than being interviewed by my own wife. On Facebook.
So this is a terrifying moment for him, but please be kind. He's nervous.
Not really. Bemused, I think is the word. I am bemused.
So anyway, after that introduction, I hope you are all doing really, really well. I hope you are all safe. If you are in lockdown, I hope you're not going too stir crazy. Fortunately, we live in the Lake District in the countryside, so we've had one of our hopefully not final walks, but we've been out and about today.
Blue skies as well.
I know.
Very nice.
It's not raining. Oh my goodness, he's rolled his sleeves up.
Oh, I'm ready for business.
he means business. Okay, so we've been discussing this morning really how we wanted to bring this, and we've had questions sent in fact the other day, and the questions that we had, I found that obviously I wasn't qualified to answer, and I found it too difficult to give an in-depth enough answer. So I brought Andrew on for some of the situations. So it's a slight follow-on from the other question answers the other night, but also we're speaking generically really around what's been going on in relation to money and finances and everything that's happening whilst we are in the throes of Covid-19, or Corona, as we all know it as. So the first question I'm going to ask you actually, Drew, is that it was from a lady that spoke to me the other day, but she said that she is self-employed. Mm-hmm. She has no income currently coming in. I advised her in a different way of obviously supporting herself with the income, but currently she has no income coming in and she has no savings. However, she does have a pension that she has, and she wants to know if now is the time to dip into the pension. So I want to expand that question as well. Is if you have money sitting in a pot somewhere, like the pension this lady was talking about, do you dip into it, or a savings account? Could you talk through the situation and what we do in this instance when we're finding ourselves?
So the answer to this question, as any good economist will tell you, is it depends. So a business with no income is clearly in difficulty, and it's worth saying that there is help on the way. The Chancellor on Friday announced a new tranche of schemes. To say that they were kind of slightly drafted on the back of a fag packet is possibly a little harsh, but there's still lacking detail to know exactly what people are going to get, who's going to qualify for it, and when. There is money there. So what I would hope for people in these sorts of situations is that any kind of need to dip into savings, into pensions, investments and so on, is hopefully a temporary issue. What we're hoping with COVID-19 is that it works its way through relatively quickly, in terms of it doesn't damage the economy for years to come. There is a chance that happens. I can bore people with supply side and demand side chitter chatter on another occasion. The question specific to this lady is, should she dip into a pension? Well, she may or may not be allowed to dip into her pension. In the UK, are we global? I think we're global. So
we are global, but
with the caveat, this is all UK rules.
Okay.
The minimum age for drawing your pension under normal circumstances, i.e. somebody isn't seriously ill or something like that, is 55. So if this particular person is younger than 55, then she can't actually draw a pension anyway, so the point's somewhat moot. Let's assume that she is able to draw on her pension. She has no savings. Obviously a rainy day fund's the first choice. That's clues in the name. It's the rainy day fund, and let's assume, despite the beautiful blue sky, it's a rainy day now. Then perhaps she could, if she had other investments, if she had ISAs, if she had just a sort of general investment account, national savings investment, premium bonds, anything like that, they can be turned into cash relatively quickly. Pensions are more complicated, and they require a lot more thought, because there's a lot more rules around them. There's a lot more procedures that regulate how you sort of interact with your pension. But if this particular lady is over 55 and she has what's called a money purchase pension, i.e. one where there are investments sitting there designated to her, which differs from a final salary type scheme, she can draw from that pension. Most of those schemes, you'll be entitled to up to 25% of the fund value as tax-free cash, and the remainder is to provide you with a taxable income for the rest of your life. Now, this whole process it varies from provider to provider, but it can be a bit sluggish. It's not necessarily a quick fix, but the money could be there. And you really need to talk to your financial advisor before doing this. I'm speaking quite sort of generically now. If you only take the pension commencement lump sum or tax-free cash, as it was previously known, you are able to put money back into the scheme. So hopefully this is really just a bridging loan, waiting for this government help, waiting for the sort of waiting for revenue to pick up in the business. So the money could go back in. Likewise with an ISA. I mean, if we assume that this lady, rather than having a pension, has her ISA, I was thinking about this on our walk this morning because I'm that exciting.
Yes, you are.
We're coming up to
I
am.
lived with him for so long. I know.
We're coming up to the tax year end now. There's rules with ISAs changed a couple of years ago to be what's called flexible ISA. So an ISA you can put £20,000 in per annum. However, when these new rules came in, you could put £20,000 in, but you could also put back any money that you'd drawn out in that tax year. So if you're looking at this as a bridging loan, you could take the money from the 6th of April rather than before the 6th of April, so you're in the new tax year. You take 30, 40, 50, whatever it is that you need to tide your business over, waiting for these government schemes to kick in, waiting for trade to pick up, waiting for other loans or so on. Then the money can go back into your ISA. It can enjoy the tax privileges that ISAs have, and it will bridge that gap, and you won't have lost any of your tax allowances in order to do that. Is it worth running through some of the schemes that have been announced, just so people have an idea as to?
I don't know. I think because there's quite a few, isn't there? There's different options.
There is a few. I can do them very quickly.
Go on then.
If you're an employer, there's a job retention scheme. If you have furloughed, which is, I think.
Actually, we've got another question about that later on. So we'll, yeah.
Do you want it? Do you not want it?
No, we'll do that. We'll do that question later on. If you have, if this particular question is relating to your certain circumstances, and you would like to speak to Andrew, again, just to kind of get any more details or any more clarity.
Just to be clear, to provide information, not advice.
To provide information, not advice. Or your particular IFA in this circumstance. You can find Andrew on LinkedIn and on Facebook. He is not the best at checking his social media. Antisocial media. But he will be at this current time. So we'll talk a little bit about more about those.
Another option, just for people who want a bit more information regarding their pensions, if you don't have a financial advisor, firstly, I would recommend talking to one. But secondly, if you don't want to, you can't. There's a service called PensionWise, which you can just stick into Google. That's a government service for people who are looking at taking the benefits from their pension scheme. It's independent, it's free. They're not really geared up to deal with hugely complicated situations, but they can go through the basics and you can rely on them. So have a little look at PensionWise. That can be delivered. Well, previously it was delivered telephone, face-to-face, and via the internet. The face-to-face isn't going to be happening anymore, but certainly telephone and internet, you'll be able to get some support from PensionWise.
Is that all one word?
It is all one word.
Right, lovely. I'm just going to type that into the chat as well, to check out. If you need a reminder, you need to look at PensionWise if you don't have an IFA or you currently can't afford one. Did you say it was the government? It's a government support.
It's something that the government set up in about 2016, so it's quite well bedded in now.
Okay.
I don't think they call themselves advisors, but the guys there can offer free support for people who are at the point of drawing their pension, so sort of people in their 50s, 60s, so on.
Okay, lovely. Yeah. So question number 2. Thank you so much, by the way. Yeah. Is it not as scary as you're thinking?
I don't know. That lady on the screen next to me.
I just want to share. Actually, we're going to try and keep this lighthearted. But this is us, as you see us at home. So this is us.
This poor woman might be locked down with me. So send us some hearts or however this works. Because
send me some love, please.
Yeah. Please do.
We do have Mama Bear mugs and Papa Bear mugs. So you show you.
Do I have to prove it?
I do. Yeah, Papa Bear and Mama Bear. Cheers. Yeah, we are, obviously, you may or may not know, we are parents, and as like any of the families currently in the UK and around the world, as from Friday, all the children were off school here in the UK. However, we homeschool our little boys, so for us it's no different, is it really? It's no different. It just maybe the isolation part might be slightly different, but Yeah. So anyway, the next question is, or the next section really we're going to talk about is about scam warnings and kind of when you maybe have to, not necessarily as in loans fall into this, but you do need to get hold of some money and there are scams out there and there are also some legitimate loans. So can you please talk about this area and what you should be looking for and what you should be staying away from at this moment?
Yeah, I mean, sadly, every time something bad happens like this, or there's a significant change in legislation, or new schemes are announced, these scams pop up. You probably see little adverts offering money, support, whatever. Some are probably fine, some are almost certainly not. So just beware. Go to a reliable source of information. The government website is as good as any. That's got details as much as there are details of the various schemes that are available. So take a look on there. Don't just follow any old link that looks kosher that appears to be offering you support. Loans specifically. There are fewer payday lenders in the market than there used to be for various reasons. That's not necessarily entirely a bad thing, although they did work for some people. That as part of the suite of help that the government's announced, loans are one of them. It's worth saying with pretty much all of the things that the government have announced, all the detail isn't there yet, and they're not even physically geared up to deliver the money as yet. But the loans one should be a little quicker than some of the other announced assistance, because what they're doing, the government isn't delivering the loan that's been discussed. That loan is being offered by banks and other financing companies. All the government is doing is, in effect, underwriting 80% of that loan to the bank. So they're taking 80% of the risk off the bank onto the government's books, which the idea is that makes more credit available to people who need it, and hopefully keeps the cost of those loans relatively low because the banks aren't taking as much risk. So again, there's information on the government site regarding this. It's not available to every single business, but it's available to most. It depends what industry you're in. Not every financial institution is part of it as yet. I guess they will be adding some more. There's about 40 on there at the moment, but certainly the big high street banks, HSBC, Barclays, Santander, TSB, all of those guys, the big names, Ulster Bank, they're all participating. Some, for instance, we're in Cumbria, some of the local building societies are not. So it depends who you bank with, but feel free to get in touch with some of those banks. That scheme will actually go live tomorrow, which is the 23rd. So those loans are up to £5 million, which doesn't mean you can get 5 million quid, but that's the limit on there. The government stands behind the loan, hopefully makes more capital available, and that the delivery is through those banks who are used to doing the credit assessment, getting the money to people, looking at business plans or whatever else needs doing. So get in touch with those banks, and I believe the first year the government is going to carry the interest for you. So that first year should be even cheaper. So hopefully it will just be a bridging loan, not a sort of long-term structural loan, which is what these schemes are designed for. But yes, take a look.
Brilliant. Thank you so much. That's great. The next question we are looking at is we have just heard at the end of last week that we have possibly businesses are getting up to 80% wage support for furlough workers. Now, that was a word that I didn't even know. I had to ask this guy, like, what is actually a furlough worker? So obviously it's coming out and it's going to be saying that everyone's going to be like, yes, please, 80% to support the, my staff. Can you talk a bit more about this, because it isn't really as clear cut as there's 80% and off you go. Can you talk a bit more about what this actually is?
What it's called is the Job Retention Scheme. There's plenty of companies that just don't have any trade at the moment, particularly in leisure and travel, retail. The idea that the government has is, instead of companies just firing, making redundant large numbers of workers, on a temporary basis, anyone who's furloughed, i.e. still technically on the payroll but not doing anything, they would otherwise have been made redundant. And the government will cover 80% of their wages. There is a cap that's £2,500 per month for the basis of that calculation. There's more details to follow. So that's another scheme. Which we're waiting for some more information on. Some of the schemes you don't need to do anything with. We might not be talking about those later, depending on whatever these questions are. But the scheme that I mentioned before, the loan, obviously you need to be proactive and actually apply for that. With the furloughed workers, again, you need to declare that they're furloughed. Then the government will step in and pay the wages. Now, the problem that I see with that, and I think the government has sort of quietly acknowledged, is that HMRC is very good at taking money from companies on payroll, on VAT, whatever. That's what they're geared up to do. That's their job. What they're not geared up to do is give money back. So how the process is going to work, how long it's going to take, are a question which hopefully we'll be getting more information in the very near future on, but something that should be looked at, but we will have to wait and see. Okay. Now, that's going to cover employment costs. It's to keep people in work, in inverted commas, but it isn't a sort of a huge cash flow solution for the business. There's still going to be rent to cover. There's still going to be all the other expenses that you have from running a business, even when you're not actually operating it. Take a look. If you want to do the right thing by your employees, you can also top that 80% up back to their full wage. Take a look at that scheme, and hopefully we'll get some more information in the next few days.
Great. So with this, I'm just going to type in the notes in the box for you in case you want to find exactly where we are in the conversation. So we are talking about 80% wage support for furlough workers. So can you just reiterate again, so I can get it right for people? So it means that the staff member is on the payroll,
but not working. Okay.
Yeah. Right. So you need to have that staff member on the payroll. You can't have let them go in this particular situation. So correct. Maybe you need to look into this before you let people go. And I know there's a question a little bit later on about trying to balance what do you do for the best for your business. So this is best for the staff, but we're going to be talking best for the business. So the staff member has to be on the payroll, has to be currently, is currently on the payroll, right? Lovely. Right, there we go. So any questions about that, you can find us. We're about 23 minutes in on that one. Right. I would like to talk to you about one of your favorite topics, which is the stock market. So at the moment, we are hearing about panic buying and panic selling. People, should they be holding on to what shares they have? And can you also discuss maybe kind of what industries aren't looking as secure as they were even, a month ago or 2 weeks ago? Brilliant. Thank you.
So panic selling, you'll have seen the stock market has fallen significantly, to say the least. So the FTSE standing at just over 5,000 just yesterday. Friday even. We're on Sunday now. I've lost a day. some companies are more badly affected than others. So you'll see some companies who are in leisure and tourism or are more exposed to workplaces being shut down. So hotel companies, Intercontinental Hotels Group, for instance, Compass Group, the airlines, International Consolidated Airlines Group, British Airways, to everybody else, have obviously taken a huge hit in terms of their revenue. They're doing everything they can to reduce costs. They're stopping dividends and so on. So you're seeing some of those companies down 60%. You're seeing other companies who are what we would describe as more defensive in nature. Unilever, for instance, is an example, which is a company that makes products that will be in everybody's kitchen and bathroom.
Yeah, that's a recognisable brand, isn't it? Yeah.
People are still going to be buying those products. So whilst their prices have come down a little bit, oil companies have taken a hit for separate reasons. So BP, Shell, there's a spectrum of what's happened to all sorts of different companies. The trick in most cases, it depends on what you have. Talk to your investment professionals, but it is not to panic. It's not to sell, because with investments, the fact that it's gone down in value is not the end of the world. We've seen these sorts of crashes before. We've seen 1987 Black Monday. We've seen sort of 2001 with the dot-com bust. We've seen 2008-9 with the global financial crisis. Markets will recover. Now, that's easy to say if you don't need to get your hands on the money straight away. If you do need to get your hands on the money straight away to prop up a company because you're drawing down your pension or whatever that might be, that's a slightly different state of affairs. But if you're thinking of running just because you're scared, that is probably not the best thing to do. That isn't to say we're at the bottom. We may have a little further to go. Markets have a tendency to overreact. 3-4 months ago, they looked rather too high, looked a little too optimistic.
So are you saying that they've actually come down to a sensible level, really?
There's a lot more value. There's a lot more value, and personally, with my portfolio, I'm looking at buying companies that I wanted to buy 3 months ago, because I liked them as a long-term investment, and I'm now getting them for 20-30% less than I would have been paying, whereas previously I thought they were maybe a little overvalued and I would have been overpaying for them. It's very difficult to just pick a company that's gone down 60-70% and say there's a whole heap of value there, let's just go and buy it, because a lot of what an analyst is doing now when they're looking at these different investments is that company going to be there in 6 months or whenever? And I think that's one of the things to take the benefit of the recovery.
We just don't exactly know who's going to be around, who looks solid even a month or 2 weeks ago, and in 6 months' time, how are they going to look?
So with that, you take a look at what industry they're in. Are they going to have any revenue? Take a look at how their business is structured. Have they got huge amounts of debt which they're going to have to repay anyway? Look at sort of operational leverage, all those sorts of things, to see how much cash is on the balance sheet. How long can these guys go with little or no revenue? And then look at when they bounce back. So in this sort of scenario, a lot of demand is deferred. So you might not go out and buy a car or a new washing machine or something at the moment because you don't want to go to the shops, or there's problems with the supply chain, whatever that reason.
There's panic buying of freezers, though.
Is there? Is there actually? Oh, wow. Okay, go and panic buy a freezer, but everything else deferred. So those sorts of purchases are really deferred. If you need a new car, you can defer it for 3-6 months, whatever. Likewise, a lot of other items, clothes are an example. So you can defer those sorts of purchases. There are other sort of activities that you can defer slightly, but again, travel and leisure and those sorts of things, people don't tend to say, well, I've been locked down for 6 months, so I'm going to go out twice as much for the next 6 months. That doesn't tend to happen, and restaurants and bars and theatres and so on don't have the capacity just to double up quite like that. So there's a very mixed bag in the market. That does look like there's some value in some cases. We might be at the bottom, we might not be, but my general thought is hold on.
Is this your gut feeling?
This is
it's an Andrew gut feeling.
Slightly more scientific than just a gut feeling. I've got a spreadsheet and everything. I know.
Spreadsheet.
You're so lucky.
I love it.
If you don't have to sell, you don't need to.
Yeah.
We can ride this one out, and the market will recover.
Yeah.
What shape that recovery takes, people talk about V-shaped recoveries, a very quick recovery, a U-shaped recovery, a more gentle one, W's, all sorts of letters that you can get. No, you can't. It's a bit of up and down.
I know.
I don't know.
I think it's maybe a bit too detailed for today. Yeah. But I want to talk as well a bit on that, because it's been discussing panic buying and panic selling, and really panic is all about fear, and I think if we look at it, whether we are a business owner or whether we are just a general member of the public, it's fear comes in because there's such a great deal of uncertainty. We usually, in the past, we have felt safe. There has been a feeling of safety because, there's routines with day to day, and we kind of do know where we are, So even within the last couple of days or in the last week, particularly in the UK, I know that Italy and further afield have been feeling this slightly more, but we are out of our comfort zone. We are out of our feeling of safety. And so this is when this fear factor comes in. And I want to invite people not to make that knee-jerk reaction. As Andrew said, if you can, because the stock market is a long-term game, isn't it? It's not just, let's put something in really quickly and then see how it goes in a month's time. So thank you so much for talking about that. And so your general gist at the moment would be that it's obviously it has dropped slightly. It could go a bit lower,
a little more than slightly, sadly.
But you're saying that you could hold. If you could hold on, you don't have to take anything out.
In most cases, there will be some companies that may not recover. One of the slightly unique things with this particular market crash is the fact that pretty much everything has gone down. So bonds have gone down, fixed interest, debt that companies issue, high yield bonds, but even government bonds. So what usually happens if everybody becomes fearful, they need to put the money somewhere. So what they do is go out and buy what would be deemed low risk or no risk type investments, which are government bonds. So the UK government issues something called gilt hedge securities. That's backed by the guarantee of the government, and they own the printing press. So if they need to pay your bond back, they can just run off some nice shiny new tenors and hand it back to you. So you'll get your money back on that. But very weirdly, even the value of those low risk assets fell at the same time as equities, as corporate bonds, high yield bonds, gold, oil, because what people were doing is they were panic selling certain funds, certain ETFs, and the fund managers were trying to get their hands on some money quickly, and they were selling the most liquid assets that they had, which were the government bonds, which bizarrely meant even though they knew that they were the safest assets to hold in a crisis, they were the ones that were being sold. That's kind of corrected itself a little bit, but we are having slightly weird times in the markets at the moment.
Brilliant, thank you. So, wow, everybody, thank you so much for being on and joining us. We are 30 minutes in, and we're probably only halfway through the questions. So if you can hang on and you have been on, that is wonderful. Thank you for staying on with us for this length of time. If you have to say farewell, please catch the replay. I know that there's a lot more goodness to come. If you would love that this is being useful, and it's going to be useful to for other people out there, please do share this video. I'm so lucky to have Andrew with me today.
Doesn't usually say that.
If you don't know, we are married. So yeah, I don't know. And I'm, I've got to have so many weeks full of isolation with this man.
Lucky.
But yeah, we are, I would say, a very old married couple. So I think
very old
married couple.
I feel very old.
Yeah. So yeah, thank you for being on with us today. Yeah, if you are liking it, please give us some hearts, please give us some likes. If there's any questions that you have, I can't always see anything coming up, but do drop some questions in, and maybe even afterwards, you can catch us and we can discuss something a bit more that's related to your question that we didn't answer. So I want to say the next question is, right, we're talking about the markets currently and how they were slightly high and they've obviously dropped. So the next question really is, what will the world and what will the markets look like when we're coming out of the other side? Now, this is a question that our people are asking a lot, to be honest. And I don't know if you have your magic crystal ball, but you can obviously, we were talking about that there has been recessions and there has been crashes in the past. And I know this is very different again, but how do you envisage us and as the markets and the world moving forward as from this instance?
Not wishing to cop out, but this is a slightly unique one. I mentioned some of the crashes that have happened in my very short lifetime. I'd hasten to that. Very short lifetime. And they've all been for slightly different reasons. The last one was the what ended up becoming the Great Financial Crisis. That was
that 2008, 2009?
2008, 2009. That was what was called a balance sheet crash. It was people borrowing too much money that they couldn't afford back and couldn't afford to pay back, and then people doing lots of silly things like inventing sort of collateralized debt obligations to peddle them around the market and to sell them to people, and even synthetic ones, all sorts of very silly things. But that was a debt-fueled crisis. The main reason for the crash in 2001 was people had bidded up the value of particularly technology shares just to ridiculous degrees that fundamentals just couldn't justify. So
this is a very different circumstance.
This is very different. Yeah. Yes, you could say that the market's been a little overvalued for a while. That's possibly the case, but not ridiculously so. What this is it's a hit to the supply side of the economy, in that companies are having to close, all the way from small cafes to airlines. So what the government's trying to do is keep the hit on the supply side, and reduce the impact on the demand side of the economy. Okay. So that's why they've put all of these support schemes in place to make sure that demand holds up, that workers still have some form of wages, be they furloughed or the company continuing to employ them, benefiting from some of the other schemes. So, with the caveat that, assuming that the sometimes coordinated, sometimes not coordinated global action can limit the downside, and with the, in many ways, more important side of the actual health. I mean, we've talked about markets quite a bit. Markets will come and markets will go, but assuming that the NHS and all the other health services around the world can actually limit the damage to people, let alone markets, I think we could be on for a relatively swift recovery. We're in a position where there's two sides of policy response which can be used to combat these sorts of financial problems. One's the sort of monetary side, which sort of looked after by the Bank of England, and they set interest rates and bank lending rules and so on, so they can try and stimulate the economy by reducing interest rates, by making money cheaper, by helping people borrow, by managing inflation, all those sorts of things. There's not much more they can do. They've cut interest rates. They were 0.75%. They dropped in an emergency meeting to 0.25%, and then last week they cut them again to 0.1%. Well, they can't really go much lower. There's a few countries in the world who've actually experimented with negative rates. The ECB are doing so in Europe at the moment, but they can have slightly counterintuitive consequences. So, in terms of monetary policy, the government or the country's kind of done what it can do. Where there is scope is on the fiscal side, which is what the Chancellor has been making all of these announcements for anyway. He announced a very expansionary budget anyway, in terms of infrastructure spend and so on. And then he's sort of drip-fed out more and more announcements in terms of being able to defer taxes or offer grants and so on, pumping money into the economy to keep the demand side up, to try to make sure that this virus doesn't cause a sort of negative spiral. It becomes a self-fulfilling prophecy.
Because what I wanted to actually ask you, which you're actually leading into one of the next questions, is what is the long-term impact? Because obviously we are, government's giving the 80% for the businesses and the furloughed workers and etc. How is that going to take us into the future as citizens of the UK?
Well,
where are we going to be standing, really?
It's interesting. After the last crash, the global financial crisis, the government went on its oft discussed austerity program, and they started reducing the overall national debt. The idea was to better match what they take in terms of taxes with what's paid out. Over the last couple of months, that's sort of been completely torn up. Following the recent general election, it looked like that would be the case anyway, because Mr. Johnson was very keen on quite expansionary fiscal policy of increasing spending and not increasing taxes. But that's just been amplified recently in terms of trying to prop up the economy. But ultimately, all of that money is being borrowed, albeit at very cheap rates. But at some point, that has got to be paid back. The way you pay back debt, if you're a government, is by raising taxes. So there will be, at the end of all of this, there will be a price to be paid. Unfortunately, that's just the way it works.
Okay, so I want to just jog back slightly about the markets and cycles of the financial world, because when I always talk to my clients, and you'll have heard me talking last week about cycles of business, and I call it, I know you call it cycles, and I call it seasons. And I was saying last week that we have, as business owners, we've been plunged into kind of like a harsh winter when we didn't expect it. So I've been talking, really now is the time to put a pause on business. If you have businesses that are I want to say kind of viable, are actually up and running and are making money at the moment, then that's fine. There's no need to put a pause on it. But what I want to say, I talk about putting a pause on things because it's not permanent. Okay, this is now the time of like the winter of our businesses and indeed our lives. All our lives are cyclical, and the seasons are cyclical, and all our businesses are cyclical. You can't always be saying, I'm going to be reaping the benefits. Sometimes, you have to kind of hunker down. Physically, we are like having to hunker down and cocoon. I'm not not going to call it isolation. I'm going to call it cocooning. I like it. But we have to cocoon in, and these are the times to kind of take stock. And we're not sowing the business seeds or the financial seeds necessarily. We're not reaping them. But at this point, we are just, this is the kind of the winter of our businesses for many of us. But I want to just say to Andrew, I know you would say it's in a cycle, and it's very out of the ordinary. But is this a cycle? Do you see this as a cycle?
Yeah, this is part of the natural cycle of the markets of overreaction and underreaction. And as I said, we're in a bit of a trough at the moment. We might or might not be at the bottom of that trough. But one thing, sooner or later, we will recover. There's a huge number of things that play into the speed and the and how that recovery actually looks. But a recovery will come. To borrow your beautiful metaphor, spring will come sooner or later from our present metaphorical winter.
Yeah, excellent. The next question I have is actually a kind of specific business-related one.
Mm-hmm.
And there was a business owner contacted and said that the funds are running low. So the business currently is closed, but there's still staff to pay.
Yeah.
I believe it's external staff. I don't believe it's a family business. From what I gather, the gist was it's external staff. Should that business keep going until it runs out of the funds that it has? I can see your response. Should the business keep going until it almost runs out of the funds it has, just to keep paying the staff? So basically, the long and the short of it is, should they keep the stuff on for as long as possible, but in the detriment of the business when it has to start back up again and it has nothing? Or should you keep hold of what savings within the business you do have, but let the staff go? It's a tough decision.
It is, and there's probably a balance somewhere there. Businesses are there fundamentally to make money in the long run. In the short run, one of the biggest assets of any business is the staff. Well-trained, well-motivated staff who are great with customers, who know the products, who know the industry, all of those sorts of things. They're a huge and valuable asset for that business. So, if possible, we talked about the job retention scheme, the furloughing. We talked about some of the other schemes. It's worth mentioning. This is a liquidity issue for companies. Cash flow has crashed in many cases. So the government has offered, for instance, deferment of the next quarter's VAT payment. Most businesses of any real scale, restaurants even, cafes, will be on one of the VAT schemes. Now, this is a deferment. It isn't a write-off. But any business will be allowed to defer their next VAT payment. So any payment that's coming up for VAT, you can hang on to that. You will have to pay it by the end of the next tax year, which will be April 2021. Likewise, for small business owners and sole traders, there's an income tax deferment scheme as well. So, as everybody who has to do it will know, you split your income tax payments into two different payments throughout the year. There's a January payment, which will have obviously already been made, but there's a July payment where you make a stage payment to HMRC. That can be deferred as well, not written off, but deferred to the 31st of January 2021. The idea being that this is to help businesses with cash flow. It's to take away short-term expenses in order for the business to concentrate on what it really needs to do. So that's the government sort of offering a little liquidity. It's not a handout. However, having said that, there are handouts. There's dependent on the size of the business. If you're in retail, leisure, tourism, industries, broadly speaking. Then there's smaller businesses, for instance, ones that get small business rates relief or rural rates relief. There's a £10,000 grant. Now that's a grant that doesn't need to be paid back. For larger businesses, there's £25,000 one if you've got a rateable value between £15,000 and £51,000. Now, again, that's a grant. It doesn't need to be paid back. In terms of when you're actually going to see the money, that's a different issue, because there aren't systems set up to do that. I mean, the guidance on it is still quite thin, and that will be administered by local authorities. Local authorities are, strangely enough, quite busy with closing schools and social care and all those sorts of things that are going on with this. So that's not something you need to apply for. I mentioned earlier there's some things that need applying for, there's some things that don't, but local authority will be writing to you if you fall into one of the applicable categories, and then there will be some money for that. We've talked about the loan schemes, we've talked about the grants. Certain businesses will also get an automatic rates holiday for retail, hospitality and leisure, which is worth mentioning. And there's for people who are already behind on certain payments, the HMRC are operating some time to pay, so there'll be certain concessions. They're not going to be quite as harsh as they have been. But something that I kind of wanted to mention that may already be help that people might have, and it is a might, but do check your insurance policy, because certain business insurance policies will have business interruption insurance, and if you have been told to close by the government, your business has been interrupted through no fault of your own, possibly, depending on what policy you have, then possibly there could be some money there from your insurance policy. So have a look at your policy document, possibly talk to the insurance company themselves or talk to your insurance broker. So if you've got that sort of policy, it may be tacked on to other policies that you have. Take a look. There could be some short-term benefit from doing that.
Yeah, I mean, I think at the moment, we are putting a pause on business, and a lot of businesses that I'm talking to, the people, because they're going into fear and worry and they're running around like headless chickens. But like Andrew said, this is the time now. You may not be out there selling, but now is the time to be working like on your business for the forthcoming future, and not necessarily in your business. And that might mean, just to keep your business going, is to really look at the paperwork that you have sitting there. You could actually have that little light at the end of the tunnel filed away that you don't even know about. So but I think now is the time really to, if you're not there with the doors open, or you don't have the customers coming in, now is the time to really be proactive and to be even just thinking for the future.
Something I was thinking on that is we've discussed sort of CPD type stuff. If you've got furloughed workers, or you are a furloughed worker, or and you're sitting there and you've not been able to open your doors, or there are no customers coming through, if you are allowed to open your doors, why not develop staff where you can? Why not develop your skills where you can? If things are going to be tough for a little while, which we hope they're not, but it's possible. Equally, if you're an employee and you're the one who's taken this quiet time to do the CPD, to sort of further what they can offer for the business in the future, that sets you in good stead with your bosses. You're going to be at the front of the queue when things start picking back up again. So why not try at least to see it as an opportunity to work, as Sarah says, on your business, not in your business, to develop your skills. And
I also want to say as well, one of my kind of zones of genius is that I help people take their existing business, or even a starting business, and take it online. Now, Andrew will totally agree with me now that we are almost having to be 100% online for lots of the way that we are working in the world. And I know that there's people who will say, I'm not too sure how to take my business online. I was talking to a lady who had a spa, and she just has no people walking through the door. You know, she does massage and Reiki and all those kind of very hands-on treatments. But she's stressing, she's struggling to see like how she could keep her business going. I think now is the time that we have to be really resourceful, and we have to utilize our skills that we have. And I always talk about transferable skills. You may need to take the skills that you have and do your business in a totally different way. So taking it online. So where you think that at the moment, you know, there is no money coming in, there actually may be a way to do it, but you can do it online. You know, people, this is a stressful time. If you can teach things like the acupressure points, you can make a video, you can, you know, or online course, and you can get people to still be looking after themselves during this time, even though you can't get them through the door. You know, you're still being able to be of service. You're still being able to sell a product. It may be seeing in a different way. And this is the kind of thing that I love. I love to take people's businesses and just, you know, basically transform what they already have and the skills they have, and to be able to work in a different way. So I would say, if you don't really see the cash in your hand as it has been, you know, do look at a different way to make money and to use the skills that you already have.
And in terms of taking business online, take your marketing online. There's a huge captive audience at the moment, people who are forcibly at home to one extent or another, who they have time on their hands, they have an internet connection, and they have very few other distractions. You know, if your restaurant's shut, throw some cooking demos out there. Do a you know, how to make your lockdown lunch or something from random
healthy culinary skills,
healthy
you know,
culinary
that
skills. So it may not even be necessarily revenue generative. It might be, and you might be able to do that. Depends on your business. But even if you can be laying down some good marketing, and you'd also be not wishing to sound too much like you, but you could be offering some good karma, which may come back in the future. You sound like it's rubbing off.
Oh yeah, yes.
But equally, you know, if your restaurant's closed, you've got the kitchen there. Are you able to do deliveries?
There is.
Take
the skills you have, really, and just look at things in a different way. Yeah. You know, we're having to be even more resourceful nowadays. But again, if you like any help and support with that, do get in touch. You know, this is what I am here for. So, I am currently also running 20-minute. I did say, actually, they used to be called like clarity sessions, but they're actually now support sessions, because for some people it really is super, super important to get to get through the next week. So I do have some spaces left for this coming week. I have 20-minute free sessions, and we can brainstorm your business and see where we can take it from. I have done some videos already, and I know that they might even be obsolete and slightly out of date, because the way that the world has moved so quickly over the last week. But there may be some ideas. But yeah, hopefully this video today can help us see into the future of how the things will be looking. But yeah, if you do require any support, just private message me and just say, Sarah, you know, I'd love to have a chat and do one of those 20-minute sessions. And yeah, I would be super, super happy to help you.
I like your little shadow across your face. I've got like a sort of...
I know.
It's actually quite
the
us.
Sun's dropping.
It's quite us. I've got sort of a very linear defined kind of face shadow, and you've got a beautiful sort of organic, natural sort of planty shadows as the sun's dropping behind us. Nice.
Yeah. So I'm gonna cut this slightly shorter, because I know we're almost at the hour. But there's one. You spotted it as well. There's one question I really. I
can just read your handwriting.
You can just read my mind almost. So
it's dark and disturbing.
So this is regarding the general population, really. It's not kind of about businesses in particular, but there may be some kind of links and crossovers. We are talking about when you work for a particular company and you have a company pension. What happens if the company does go bust during this time? Where does your money go? What happens with that pension?
Okay, so since Mr. Maxwell,
who's Mr. Maxwell?
Who's Mr. Maxwell? He used to run the Mirror Group.
Right. Okay. So
and
that
he was
Maxwell,
not a nice man, and he stole lots of children.
Yes.
I'll tell you a little story. There was once a man called Robert Maxwell, and he was not a nice man. He ran the kingdom of the Mirror Group pension scheme into the ground. He stole all the money out of the pension scheme in order to support the failing business.
Are you allowed to say that?
He
did that go to court?
Yes, that's a factual position.
Okay, that's
and he
not
can't
just
sue me because he went for a short swim in the Mediterranean. He did.
No, stop.
It's a fact, people.
Can we just talk about what would happen?
Silly now?
Can we just talk about
important thing? Pension schemes are something that people are worrying about if they're worried about the status of their company. Two main types of pension scheme that you might have. I'll start with the simplest, what's called a money purchase pension scheme. So a money purchase pension scheme is where you and or your employer put money into a scheme which is then invested for your benefit for eventual retirement. So that money is ring-fenced. So you might have an auto-enrollment scheme, for instance. They work on this basis. The value of the pension that you ultimately get is determined by the growth of the fund and how much has gone in, nothing to do with how much you earn. So those funds are separate from the company. The company has no access to them. If the company fails, that money is completely separate. The liquidators can't go after it. It's fine. The other type of pension scheme, final salary pension scheme, slightly different. So this is a scheme where, depending on how long you've worked for a company and how much you earn, it determines how much pension that you get at the end of it. It's calculated by actuaries. And there will be a pool of money there, but it isn't quite ring-fenced in the same way as a money purchase scheme, in that it's just a big pool of money, and actuaries periodically do calculations to work out if that pool of money is big enough for what they expect the pension liabilities to be. So in that case, the company fails again. The liquidators of the company or the creditors of the company can't take any money from the pension scheme. That's protected. The risk for the members of that pension scheme come where the monies in that fund are insufficient, particularly after a big stock market crash like we've experienced, where the value of those funds will have gone down. Will those monies, following the failure of the company, be sufficient to pay those liabilities? Well, if they're not, there is a protection scheme. It's called the Pension Protection Fund. It isn't funded by government. It is funded by a levy on final salary pension schemes. So it sort of comes from the other big companies, and you have protection for non-retired members up to 90% of the value of your pension, with certain threshold limits. So most, although not all, of your pension is protected in the event of your company failing, and there being insufficient funds in the pot to do that. Not all companies' pension schemes are what's called underfunded, but unfortunately quite a few are, and the recent market falls will have probably exacerbated that problem in a few cases, but it's mostly protected, though not all.
Okay, that's great. Yeah, thank you so much, Andrew.
No problem.
We are now at 1 hour 3 minutes. Oh my goodness. So we have talked and talked and talked, but I hope this has been really useful for you. Sorry, I'm just moving this around. If it's been useful for you, please please share. If you're watching the replay, please type in where you're watching from around the world. As you know, we are here in the UK, so obviously the systems that we are discussing are slightly different, but hopefully it's some food for thought for where you are based in the UK as to where you need to go to ask specific questions and who you need to ask. I've popped in the question in the chat box about the business support. I am offering business strategy and emotional support. This is a really emotive time for people at the moment. If you want to know any more about Andrew, you can speak with me and I'll vouch. No, it's fine. You can find him on LinkedIn and Facebook as well.
Which I visit annually.
Visits annually. But if you want to get in touch with him, you can also get in touch with him via me. I just want to thank you so much for joining us today, Andrew. Yeah, you've been so helpful, because
thank you.
This time is uncertain, but I do want you to remind you lovely people to stay positive, stay in gratitude, stay out of fear as much as you can. Look at the facts and make decisions from the facts, not from hearsay and not from fear, and not from guilt in some situations that we were talking about the other day. Reach out. There are people out there like myself, like Andrew, any other business coaches or any other advisors that you may be able to speak with. We are out there and we are of service and support at this time. We have been and we always will be in the future. So on that note, I want to thank you so much again, Andrew. It's been lovely doing a live with my hubby. He watches me usually from the back or upstairs and listens to me, and he's now on today. So
Does this mean I'm famous now?
Yeah, it means it's the Sarah and Andrew show from now on. But I want to wish you all a very, very happy Sunday. Take care and be safe, and we will see you again. We will see you very, very soon. I do daily posts, so I will probably be on tomorrow. In fact, I'm going to be on tomorrow. I'm going to be talking about the mindset that entrepreneurs should have of how to actually take you from where you're looking a bit surprised.
I'm just wondering if there's any punctuation in that long sentence.
The live tomorrow will be about where you are as an entrepreneur and how to take you from where you are to the other side when we get to the other side, but in a more positive way. We're going to be talking about looking for opportunities and making the most of the business that you currently have. And until then, again, thank you so much. Enjoy your Sunday, and we will catch up with you very soon. Take care. Bye for now. Lots of love.